Pumpkate, the next billion-dollar opportunity. Let's have a look. Currently sitting at 3 cents per token, 32 million market cap. Volume is up. Announcements are flowing. What is the opportunity here? So the interesting thing about this token is that it's a fully circulating supply through pump.fun. So it was originally launched on pump.fun. It has 100% circulating supply. Now there have been a lot of developments. In this video, I will go over everything and why I think this might be an interesting play to follow. So lately, there haven't been too many interesting projects in the market, but Pumpkate is one of them, and I will tell you why. First of all, they won $250,000 from the pump.fun hackathon as one of the most interesting projects, right? In addition to that, they recently announced, and when I say recently, I mean literally a couple days ago, that they've raised $5 million from Jump and Foundation Capital, which are two very interesting names, and I'll explain you why. Now, before we dive into that, we're going to have a look at Grail's thesis from November 2025 on why this is an interesting project, right? He's talking about the thesis on prediction markets, true product market fit. Crypto narrative is going to sustain the market only growing, and we've seen a lot of growth. So he was right over the last 6 months. The founder calls Pumpkate the trenchifications of prediction markets. Anybody can basically open markets where basically predictions can take place. Now, he did mention, the founder, just the other day, that there's going to be some guardrails. Obviously, that makes sense, to basically prevent just low liquidity shit markets from existing. It should be more free. But it shouldn't basically be completely free, right, at the end of the day. Now, the important part is, why am I using this article from Grail? Because the Pumpkate website barely has any information. It's still in beta. It says status upgrading, markets paused, ETA soon, open beta is on the horizon, and then it just links to Twitter, right? So things are unfolding as we speak. Currently, at the time where he was writing it, was sitting at 9 million FDV. Now it's sitting at about 30. And things are developing on a daily basis. The project is getting a lot of exposure at the moment. So while Kalshi and Polymarket are focusing on longer time-bound predictions, this product serves in a different market, one that caters to real-time, short-term. So it's catering more to the degens, right? Some obvious risks. The tech does not work as promised. Streamers don't bite. Streaming platforms, blah, blah, blah. Solana curse. Okay, let's see. Fair launch for all. The token itself had a fair launch with no interest. Okay. Now, basically, it's up. And I mean, that was pretty interesting. Everyone had a chance to buy this under 1 million for a long time. But Grail was talking about it at 9 million. Now, it's basically at 32 million, and then the all-time high was just on the announcements the other day was like 44 million, right? So, I mean, interesting token to consider. Thesis is interesting. Prediction markets are massive, and now there is an opportunity for the degen world to interact. If you go to Pumpkate, I mean, there's tons of content basically being pushed, right? A large variety of different things. Now, let me first start with Jump and Foundation Capital. If we look at the portfolio performance of Jump, as it marks here as tier 2 VC, I would definitely put them in the tier 1 bracket. They obviously also do a big market making. They've done a total of tracked 108 investments, retail ROI on a retail level 2.2x, 127%, definitely an extremely good track record. And we see here 3 days ago announced Pumpkade. Then we look at Foundation Capital, retail ROI 80x, so 8,000%, a lot less investments, ranked at tier 3, which I also think is a little bit crazy. And here we see the Pumpkade announcement. But yeah, 2 reputable VCs, 2, I would say, longer-term strategic alignment. But the interesting part is, of course, because the token is fully diluted, these came in on equity, right? Now, that's all interesting. I want to talk about this H round. So this H round is basically bridging tokens and equity for the first time, and I have some remarks. So it's an asset conversion to equity round, introducing a legal bridge between the token layer and the equity layer while keeping each one independent, making it compliant with US security regulations. In an H round, eligible token holders can convert some of their tokens into a community safe, which is modified Y Combinator safe, which Y Combinator safe is the industry standard, if you didn't know, adapted for on-chain issuance. So simple agreement for future equity, right? Safe. Default. Okay, it talks about blah, 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 blah. Why he's doing ACE. It started as an ID, evolved into clear version, won the hackathon, raised 1 million pre-seed from Foundation and Radio Solace, led by pump.fun. Okay, so that was an earlier round. A short after, raised 5 million seed from Foundation and Jump. Since then, the expansion began. Now, I didn't have the necessary 10% token supply required to participate in the hackathon, blah, 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 blah. I only had, okay, so the exposure that they have, so the team doesn't have any tokens, right? Okay, what's going to happen? So they're going to offer 10% of the equity in the company for 25% of the total circulating supply at the moment. Conversion of 1 to 2.5, 1 equity, 2.5 tokens. It will be interesting. It will be open for 1 month, and then everything is tracked. Now, the most important thing, as I've been doing a lot of work on real-world assets myself, tokenization, the underlying here, as far as I understand, so here they go into the details. So the safe will be represented by NFTs delivered in participating wallets. The NFTs will be initially non-transferable, with the admin powers controlled by PumpCade. You should assume there will be no liquid market for the safe or any related share, which is normal, right? Corresponding NFTs until acquisition or IPO. Even on an acquisition or an IPO, a wrapper of a token, in this case in an NFT, the equity should be proclaimed in an SPV, so a special purpose vehicle, an entity holding the actual equity, and then the tokens, whether they're tokens or NFTs, resemble that equity on chain. That is not clear here. Only non-US investors can participate, need to KYC. That all makes sense. You cannot swap the tokens back at any moment in time. We need to basically find the rights to the underlying asset. So if there's any problems, do you have any legal rights? Yes or no? Which sounds really boring, but is pretty important with the amount that needs to be done. A new app from Metalax built for token projects. The project's real world legal entity holds an equity round. Okay, so the entity here needs to be an SPV. I don't know if there's any mention of that, but if there is, then it makes more sense, right? So they're giving some acquisition examples, how ACE works, Y Combinator safe, tokens and equities. You participate, kick it back. Regulation D. Okay, so they're quoting the regulations and stuff. So, of course, I'm not going to read everything here on this call, but it's on this recording. But it's important that you go through it thoroughly. I mean, there's so much information here. So I assume, as they are stretching it so much, here, unruggable rounds. All right. I assume everything is covered pretty well, as you can see, in terms of how much has been quoted, how much has been referenced. But you should always make sure that you have the claim to the underlying. So yeah, extremely interesting on that point. Now, that's not my point. This is the main point on the video on why I think it's interesting. So if you scrolled until this point, or you're still here, great. The main point of why I think Pumpkate is interesting as an opportunity is the only reason the team would want to get control over some tokens and give equity. Nobody wants to give equity away, right? Equity is the quote unquote real money. Tokens are tokens. So I've never seen this happen. I mean, I've done over 250 go-to-market campaigns for Web3 projects, and I've never seen anybody want to give equity up for tokens. Why are they doing that? The only logical assumption I can make, and it's just my opinion, is they understand that the token is undervalued. Now with their setup and what they're going to deliver, they only know what's on the roadmap, and they have a good prediction of how it's going to impact the token price. That's the only reason they want to get their hands on more tokens. One, control the market more, so have more control over the total supply of the token. Two, they know that these tokens will likely be worth more than 10% of the equity, which is very interesting, right? So two-sided equation. One, control supply. Two, valuation and money, which means that I am not interested in the equity at all. Could be generational fumble, but I would like to see this process proven. I am not the investor to take the risk. If I would participate in this round, it would be like with a more significant amount. And I don't know how this is going to play out. So my play would be, while everybody's buying these tokens to swap them for equity, is buy the tokens just to ride the wave of the token price with the actual team. I think that's the right move, the right balance, risk reward. Interesting product. Interesting exposure, good investors. Let's see what the actual product looks like. And that's the risk you have here. We haven't seen the actual product. Does it work? Is it going to be as degenerate as pump.fun? What are things going to look like? But an interesting journey ahead. So that's basically my full conclusion on Pumpkate. Let me know your thoughts in the comments down below, and I'll be sure to have a look. Thank you so much for watching, and I'll see you in the next one.